Well, good afternoon, aspired traders. My name is Derek Fong, and today what we want to talk about is that we want to talk about entry orders going long on a certain specific stock. And right here, today's date is 26th of July 2018. And during this lunch, after lunch, I've been screening through some charts using my screener, and I'm doing some qualifications on the fundamentals of the company. And now I come across to this company called CPRT. It's a car sales company, and here it looks like there's a I mean, it has a potential dip right here. There's a bullish candle. Yesterday was a very bullish day, and I received questions that after our group studies that Derek, because they're beginners. So how do I place an entry order? A set of entry order. So if you look at this candle right here, is that I remarked the high of this candle is 58.4 because when we take a bullish entry or long entry, is that we want to place the order slightly above the previous day candle. So which I mark about is about 10 cents above the high of this candle. So let's say it's a 58.5 in this case. And so far, if you look back in the price action, okay, set automatic. So far, okay, if you look back at the price action, the trend looks very healthy. The moving average has been being a bit, far apart from each other, and the price has been bouncing off the 50 moving average. Service sector and automobile sales industry has been very bullish, a lot of strength. So now to take this potential dip right here to buy is that of course the first thing we have to define, yes, we know where to enter, and at the same time we have to predefine the risk that we will accept to take this trade. So first of all, when we actually define the risk, is that also define the stop loss. So if we define a stop loss, we also have to look at the moving average, because normally when we define a stop loss is below a certain support level. And in this case, we take the moving average about 57.15, all right, which I actually remarked right here, 57.15, around that area. One ATR below 57.15. Now, what is one ATR? ATR is an indicator that measures volatility, and usually it's taking about the average of 3 months of the ATR. So if we look at ATR right here in this column right here, ATR. So what I've done is that I've done an average. I've actually insert a line here to mark an average line, so which is around half of this, which is about let's say 1.15 in this case, roughly around there. So all right, there you have it. Here's the range is 1.15 below this moving average right here. So what you can do is that you put a line here, which you can click. You can simply just click here, this button, drawing tools, go to the dollar sign with a horizontal line. Then just simply click that in the area of your chart. Then you can move it up and down. Left click again. Then it actually tells you the price level on that. So if you don't want this line, then it's annoying. Then you can click it away by simply removing the drawing. Right click on the chart, go to remove drawing, click it, it's gone. So okay, we have predefined the stop loss. Okay, let's move back to automatic sizing. Okay, now once you have predefined stop loss, let's say in your case that you probably want to reach just 2% or 2% in your case to actually get the reward of 4% of your capital. All right, that's the maximum you'll lose, 2% of your capital to win 4%. So in the long run, if it's 50% and above, they will be very profitable. So now what is the profit target? The profit target is 2 times the range of the stop loss in this case. So what I predefined is at 63.5 cents. All right. So the next question is that now we have predefined the entry levels and profit target and stop loss. So the next thing is that to go into setting the orders. We normally right click the chart and go into buy custom. Then we go into the buy custom with OCO bracket. Now you might want to ask what is OCO bracket? OCO bracket, if we expand this abbreviation, it means one cancels the other order. So meaning that if the price opens tonight, which is higher than our entry, it triggers the entry order, then the profit target and the stop loss, both of them are active. So if price reaches the profit target, then it closes the stop loss order automatically at the same time. Now, contrary to that, if the price moves down to stop loss, it closes the trade and it also cancels the profit target at the same time. Right, so that defines the one cancel the other order, or OCO bracket. As you can see, these are bracket orders. You have everything predefined earlier in a bracket. All right, you have entry, profit target, and stop loss. So now let's do some exercise. We go into the buy custom right here, right click on the chart, go to OCO bracket. Then once you click OCO bracket, you can see there are three orders entry. Let's say you've done some position sizing using the position calculator provided earlier. And now if we look at this order entry is about 58.5. Okay, we can click in 58.5 here. Now this is just a limit order. So usually when we if we want to enter a dip in an uptrend, we want to catch the momentum. So if the price goes above this green candle right here, green candle, we want the order to be triggered. But the thing is that sometimes when the price gaps up, it gets up higher than we anticipated. Okay, let me expand my chart a bit. Okay, let's say for instance, if the price gaps up beyond our favorable price, it would actually reduce the reward ratio. So if it says, let's say if you anticipate for 58.5 and a little bit slightly higher to accept the price, but if the price gaps up when it opens, it gaps up to 60.5 or beyond that, then probably your reward ratio will be reduced to down to 1.2 or 1.5, which is not favorable in the long run. All right, so what you want to do is that you want to set your limit order to stop limit. So now if you set to stop limit, it predefines a range where you can accept when the price gaps. Like if it's more than what you have anticipated, you will not want to enter the trade because your reward ratio will be compromised. So let's say in this trade, we just want to accept only 20 cents higher than 58.5, so which is 58.70. So, okay, what you want to do is that you want this order to remain active for just 1 day. So let's say if the price is not going up, it gaps down tonight, and then it closes below. You do not want the order to remain active. You want it to close at the same day. When the day ends, it cancels out the whole set of the order. So we remain this tab as day, active for day. So now moving on is that we go to our profit target. This is very straightforward. We have predefined 63.5 limit order, go and then go to GTC. Now GTC means good till cancel. Okay, good till cancel means that once the entry order has been triggered, then you want your profit target or even your stop loss to remain active until the price reaches that level or beyond. Then it closes the trade. All right. So same goes for stop loss. We set the stop loss price 56 in our case. And okay, let's say if the price goes down unfavorably, goes down, and then you want to stop it immediately to close the trade automatically. So what you need to set is that at market price, mark at market price to close immediately, because you don't want to lose more than 2%. But sometimes the market, when it gaps down beyond 56, the price, all right, you lose slightly more than, like 2%. All right. So also remain the trade order to be active as GTC. So your buy order would be day, and both of the sell orders to be GTC. Right. So once you've checked everything, the value is right, position size is correct, then go to confirm and set. If you click this, there'll be an order ticket confirming your cost of the trade, including the commissions right here. They've done a calculation for you. There's one thing good about thinkorswim. So everything is calculated earlier before you even click the last set button. All right, let's say you have better stocks to trade rather than trading this stock. You do not want to enter this stock. You want to cancel this predefined order. So what you have to do is just simply click delete. All right, so then you can simply just scroll to other stocks after this. All right. So if you have any more questions, doubts regarding this video, or any other questions, I'll be happy to answer that. And you can post your questions to our study group. All right, in WhatsApps, and then I'll generate a video if you need it. All right. Okay. Now have a good day. Happy hunting, and see you all again. This is Derek Fong here signing out. Thank you.